Banks have been hit extremely hard over the past 12 months. Shares of JPMorgan Chase crashed over 40% in the month of March. But this bank may see huge upside potential moving forward, and this may be the best financial institution to buy now when shares are considered undervalued. Just currently trading over $100 a share, away from their 52-week high of $140 a share. This may be one of the best buys right now if you want to get into the financials. And this is because JPMorgan is expanding, diversifying their income streams, and is adopting to new innovations in the marketplace. They just announced the launch of their blockchain division called Onyx after a big tech client of theirs adopted their own cryptocurrency for commercial use. This is a huge innovation because cryptocurrencies, the Bitcoins, those are only growing in demand right now, and a lot of traditional financial institutions and banks are holding off from entering that space. But JPMorgan isn't doing that. They're being an innovator, they're trying to be a market leader, and has announced their new division based on blockchain, and the fact that they have one commercial client already using their own cryptocurrency is absolutely incredible. And another reason why JPMorgan may be about to surge is because they're doing all the right things. They're competing with Square and PayPal. Those two financial tech companies are up over 80% each over the past 12 months. Both companies are seeing insane revenue growth and a growth in their clientele. And JPMorgan is coming right at them and is taking on them as direct competitors with their new smartphone card reader that will allow faster deposits per sales for small businesses into the bank account. And they're actually beating these two companies by charging lower fees, and it will actually be free to use this service. So JPMorgan is coming after their competitors, and they're doing a great job of that. And in this video today, we're going to take a look at JPMorgan stock, go over in depth these two new headlines about how the company is expecting to grow, and take a look at the company financials, some price targets moving forward, and what I expect from JPMorgan over the long term. So if you're new here, I am the Gen Z investor. We talk about the stock market every single day on this channel. We go over different stocks you can buy and sell within your portfolio. And in this video, we're going to discuss JPMorgan Chase, which may be the best financial company you can buy right now at this current price point and for the current valuation. So please hit that like button and subscribe. JPMorgan's new division, Onyx, based on blockchain, I believe is really going to help set the company apart. And this is especially because JPMorgan's personal coin, JPM coin, is now being used in round-the-clock transactions from a major large tech client. We don't know the name of the large tech client just yet, that hasn't been released, but what we know is that it is being used in round-the-clock global payments. This is fantastic because for these new coins, there's going to be a lot of different coins out there in the market. A lot of big companies across the world are going to try to develop their own form of cryptocurrency. But the ones that are actually going to win over the long term are the ones that can get consumers on board. The ones that have that stability, the reliability, the ones that people understand and feel safe entering into. And if JPMorgan Chase, the largest banks in the US, buy assets, may be one of the companies that actually can achieve that by being one of the first to market, being one of the first to get a large tech client using this around the world on a daily basis. So this JPM coin is still new. It's only been around for a year, but overall the fact that their blockchain division and the fact that their JPM coin is actually being used every single day, I believe is a big stride for the company in the blockchain space. This Onyx division has over 100 employees, and their kind of mission for this division is that we're launching Onyx because we believe we are shifting to a period of commercialization of these technologies, moving from the research and development stage to something that can become a real business. So of course there's still so much speculation, but I think they absolutely nailed that definition and the plan for Onyx. Over the past few years, Bitcoin has really just been an idea. But the fact that their main competitor PayPal just announced in 2021 that you can actually buy, hold, and use Bitcoin at over 20 million retailers through the PayPal system, I believe that kind of just shows that we are now entering a world where cryptocurrencies are actually being used in transactions to buy and sell goods and services on the internet. And the fact that JPM and their coin is doing that right now, I believe is great strides for the business. The second major headline that I think is going to help JPMorgan grow and actually compete in the ever-changing financial marketplace is the fact that they are going right after Square and PayPal. I really like this move from JPM. The big banks traditionally have been slow movers. They really aren't competing at the fast rate that they need to against the young tech companies, and the fact that JPMorgan is doing that right now, although they should have done this years ago, we can't go back in time. But the fact they're making the stride right now to get ahead and try to compete head on with these two mega cap financial tech companies that are growing at a fast rate, is a great sign for me. And what they're doing is they're coming out with this smartphone card reader that will actually rival Square and PayPal, and it will be more efficient and provide lower costs to small businesses. So JPMorgan Chase is making a play to sell more services to millions of American small businesses and try to take clients away from the traditional Square and PayPal. So the bank is rolling out a checking account that is paired with this new financial tech service called Quick Accept, and this will allow merchants to actually receive the funds from sale in their bank account on the same day, and this will be free. Their competitors like Square usually take a day or more to get payments into a bank account and actually charge a 1.5% fee to make that transaction instant. But JPMorgan Chase and this new Quick Accept account will be doing that for free and allow the Chase business bank account to see that money instantly in the account, which is a huge step for small businesses who need to manage their cash flow. JPMorgan is using the fact that this service is free to kind of differentiate themselves away from Square and PayPal. Because in reality, they're offering the same service. The card reader, the mobile payment solutions, those are all the same things that Square and PayPal are offering. But the fact that they can do it from a large, trusted financial institution, and they can do it for free and faster than Square and PayPal, I really believe this is going to help them transition some small businesses away from maybe the financial tech sector and into the more traditional banking system, which can help not only JPMorgan itself, but the overall financial institution grow as a whole. Because once you can get these small businesses transitioned away from fintech companies and you get them back into the JPMorgan ecosystem, they use this JPMorgan product, it's more likely that their personal and other financial services are going to be with JPMorgan as well. So this is the second major headline that I believe is going to help contribute to a massive run-up in the financial company, JPMorgan, moving forward. Now, if we dive into the actual stock price, we're going to take a look at the company's fundamentals, some future price targets, and what we're expecting from JPMorgan moving forward. Of course, the pandemic, the economic shutdown really killed the financial sector, but every single bank across the board was hit very hard. And this is something that I believe will personally recover. In my personal financial freedom portfolio, I hold a significant portion in the financial sector, and I own all the major companies like JPMorgan and Bank of America. And these companies have hit extremely hard, and they're actually my worst performing sector in my portfolio right now. But I'm still bullish. I believe at this price point is a great time to actually buy in. I like JPMorgan at this around $100 per price point per share, and I believe that still I see upside. I don't see JPMorgan decreasing much further unless we have some major catastrophic event. I believe the financial sector will be here for a long period of time, and these two main brands like JPMorgan are going to be here to stay. So if we take a look on the 52-week range, they are trading on the low end towards the bottom. They have a forward PE of around 13.33. They have a yield right now of 3.6% and have a market cap of $305 billion. Over the past 5 years, shares are up over 52%, but of course, in the month of March, a massive decline has brought them back to the same price level we saw about 3 years ago. If we take a look at a Morningstar report, JPMorgan's fair value is estimated to be around $124 a share. And the fact that they're trading right now around $100 shows that if you can pick them up at this $100 price point where they've been fluctuating over the past few months, you are actually buying them at around a 19 to 20% discount of their fair value. That is absolutely incredible. Getting a solid blue chip company that still yields 3.6% at a 19 to 20% discount, I believe is a great addition to your portfolio. And if we take a look, their last earnings report was actually very done. It was great. I really enjoyed reading through it, and the fact that they posted these numbers, even during a time of economic uncertainty, really reassured my position in the company. So they brought in earnings per share of $3.09, beating by 85 cents the earnings per share expectations, and they had over $29 billion of revenue, beating by close to $960 million over analyst expectations as well. So another quarter that actually saw a massive beat for earnings per share and still allows me to be kind of bullish on the company. If we take a look, analysts are still expecting good things moving forward. The future annual growth rate for earnings is expected to be around 11.3% over the next 3 to 5 years. And over the long term, once we get over this little hump over the short term, they're expecting JPMorgan to continue their upward trend, see global revenue and earnings growth continue to grow over a longer term perspective as well. And this company continues to impress, and they're still paying out their dividend. So they passed the Fed's stress test, which means they're allowed to maintain their dividend payment. They actually aren't allowed to increase it right now or do any share buybacks just to bolster up their capital position, but their dividend is still currently yielding 3.6%. They only pay around 48% of their earnings as a dividend, and over the past 5 years, they've done a beautiful job of growing that dividend at a rate of over 16% averaged over the past 5 years, and they've done it for 10 consecutive years. I don't think we'll see a dividend increase this year because of the Fed, but overall, I do believe this company, once everything goes back to normal, will continue their upward trend and continue to grow the dividend payment like we've seen from financial institutions over the long term. If we jump into some price targets, if we take a look at CNN Business, the average price target for this company over the next 12 months is at $119 a share, which represents around an 18% potential upside for this stock and is recommended as a buy right now, with 17 analysts all putting in a buy rating. 1 outperform, 8 holds, and only 1 single sell. So an overall buy analyst expectation right now for this company. And if we take a look at the Wall Street Journal, they have an average price target for JPMorgan at $117 a share, which of course represents around a 17 to 18% potential upside from the current share price. And now we're going to take a look at the company financials and why this may be the bank that will outperform moving forward like they've been doing in the past. If you go on a 10-year chart of the financial system, JPMorgan and Bank of America are the only two that have really outperformed the others. So JPMorgan has a proven history of growing demand, growing revenue, and growing income. They have very high net profit margins, and I believe they will continue to grow over the longer term perspective as well. If we take a look at their income statement, total revenue growth year over year, all the way up until the pandemic. Each and every year they saw a beautiful revenue upward trend, and then of course they would hit hard this year, which is to be expected, and we did see a decline over the past 12 months. If we take a look at the net income trend before the pandemic, same exact picture. Long-term trend of growing net income, but then of course over the past 12 months, they've had increased expenses regarding the pandemic, and we've seen a slight decline that I believe will continue to recover over a long-term period of time. If we take a look at the balance sheet, they have total investment growth has been absolutely incredible. So investments were growing for 3 consecutive years, and then we saw a massive jump over the last 12 months. 1.5 trillion in total investments. And if we take a look, they have over 3.2 trillion in total assets. And total assets have been growing consistently year over year as well. If we take a look at deposits, so deposits growth is what banks need. Of course, they take bank deposits and they loan it out to other people as mortgages, to businesses, they invest in the stock market, and they use the deposit money to earn income for the bank. And total deposit growth has seen record-breaking numbers to over $2 trillion over the past 12 months. A $500 billion increase in deposits over the past 12 months is absolutely insane. There's more money in the economy, there's more money being printed, and there's more money in the banking system, which allows JPMorgan to give them more funds to go out and actually, earn more money with. So I believe this is a huge, huge benefit for the company, and overall the largest financial institution in the US with regard to assets, nothing too worrying. And with a company, you like to see total equity growth year over year, and that is exactly what we're seeing from JPMorgan over the long term as well. So a company with some solid financial statements, income, revenue growing year over year before the pandemic, which is to be expected, and they were growing at a very nice rate. The balance sheet, I believe, is solid. The largest company with a massive increase in investments and deposits. And overall, I believe they're in a good financial situation, like in taking into consideration what's going on in the world. With everything that's going on, they could be in a much worse spot, but I don't think there's anything to be worried about. I don't think JPMorgan is shutting their doors anytime soon. And I believe this is one of the banks that I would hold, I continue to hold, and I may be buying more very soon because of the news headlines we already take a look at. So that was everything for today. That was my quick analysis on JPMorgan Chase. So please hit the like button and subscribe, and I will see you in tomorrow's video.